Hi, and welcome to Chapter 2, Entrepreneurial Integrity and Ethics. So what is integrity? It's what one believes to be right and proper. Values such as honesty, reliability, and fairness are hallmarks of integrity. Integrity is an essential element of successful business relationships. It's as much about what to do as it is who to be. Ethical issues involve questions of right and wrong. It often comes down to self-interest versus the needs of others, and often in the short run, business owners may feel that it doesn't pay to be ethical. Small business owners face so many ethical dilemmas when it comes to relationships with people both inside their company and outside parties in the marketplace. Ethical dilemmas relating to employment and promotion, employee responsibilities and actions that in some way conflict with the best interests of the employer, compliance with governmental requirements and reporting to government agencies, practices and deceptions that tend to defraud suppliers, and business obligations to the environment and society. Opinions vary regarding the social responsibility of businesses, and when there are multiple business owners, this complicates the decision-making process. The bottom line is that entrepreneurs must protect others' investments in the business. Integrity applies to various stakeholder groups. Stakeholders such as owners, customers, employees, government, and the community must be considered when making ethical decisions. Maintaining integrity is always linked to a business owner trying to promote his or her own interests while respecting customers and valuing employees. I can't stress the importance of building relationships with customers based on trust, since this is what will sustain a business over time. But often, advertising and direct selling can cause ethical issues to arise, and business owners can find themselves in a situation in which it would be easy to compromise their integrity. Some of the most common ethical issues faced by small business owners involved income and expense reporting, truth in advertising, bribing, direct selling, relationships with employees, and accurately reporting financial information. Small business owners also have the added burden of dealing with employees who may not act ethical on the job. There are employees who may not put in an honest day's work, but instead spend their time on the phone or surfing the web. They may file fraudulent workers' compensation claims or steal company property, or they may violate your company's code of ethics to make a sale. Not only do managers affect employees' lives while they're on the job, they also affect employees' private and family lives. Companies that have a basic commitment to supporting their employees have policies that restrict excessive overtime work that interferes with family life. They set adequate wage levels, and they allow flexibility in leave policies to permit employees to deal with family emergencies. Businesses who don't treat their employees with respect will find that at best they experience high turnover and low profitability. But what often happens is that they simply can't stay in business. Social responsibility in the small business. There's often a lot of debate about whether a socially responsible business can maintain a competitive advantage, but there are certainly a lot of examples of them. Small businesses are generally expected to meet its ethical obligations to customers, employees, and the community. It's regarded as the price of freedom to operate in a free economic system. This often takes the form of personal contributions, volunteerism, and the contribution of services by the company and its employees. There are many challenges as well as benefits of acting ethically. Many small firms are often vulnerable to temptation because they don't have many of the advantages of larger corporations. But integrity is crucial to small business success because it generates trust with all of its stakeholders. Small business owners may rationalize bribery because they may feel they need to level the playing field, or they may rationalize skimming. Skimming is a method of reducing income taxes by falsifying tax returns through underreporting of income. It might be rationalized in many ways. For example, we're already paying too many taxes. It provides compensation for unnecessary paperwork required by the government, or others do it, or it's the only way we can survive. Overall, however, entrepreneurs are found to be less moral on some issues, but more moral on issues that big corporations may not be.